Welcome back to the Pro Ticker Podcast, your Tuesday morning edition covering major financial magazine headlines, everyone. It's Christmas Eve. But we're not taking a break from the markets. We're diving deep into some market-moving forces with a look at what the Wall Street Journal, MarketWatch, and Bloomberg are saying.
Sounds like a plan. Let's get right to it.
Okay, so we've got iPhones potentially pushing Apple to a $4 trillion valuation, quantum computers threatening to crack Bitcoin's encryption, and a potential Honda-Nissan merger that could reshape the entire auto industry. Lots to unpack today. First up, let's jump into MarketWatch's take on Apple. Analyst Dan Ives is predicting Apple could sell a record 240 million iPhones in 2025, fueled by the iPhone 16's new AI features, Apple Intelligence, and a massive upgrade cycle with 300 million iPhones globally over 4 years old. But here's a real headline grabber. Ives believes Apple will be the first $4 trillion company by early 2025. What do you think? Is this realistic, or is Ives getting caught up in the hype?
It's a bold prediction for sure, and it really hinges on the success of Apple Intelligence. We've seen AI hype cycles before, but this one feels different somehow. The potential applications are vast, and Apple has a knack for integrating new technologies seamlessly into its products.
Yeah, that's true. They've always been good at making cutting-edge technology user-friendly. But let's play devil's advocate for a moment. What are some of the potential risks that could derail Apple's growth trajectory?
Well, antitrust concerns are always looming for tech giants these days. Regulators are increasingly scrutinizing Apple's App Store policies, and any major changes forced upon them could definitely impact their revenue. Also, supply chain disruptions are a constant threat in the tech world. We've seen how chip shortages can impact production. And geopolitical tensions, well, those could exacerbate these issues.
And of course, the broader economic climate plays a role. If we head into a recession, consumer spending on premium devices like iPhones could take a hit.
Exactly. So, while Apple's future looks bright, there are definitely some potential headwinds to consider.
Makes sense. Speaking of potential disruptions, let's move on to a story from the Wall Street Journal that sounds straight out of a science fiction movie. A looming threat to Bitcoin, the risk of a quantum hack. They're reporting that researchers are warning about quantum computers like Google's new Willow chip eventually being able to crack Bitcoin's encryption. So, what exactly is quantum computing, and how does it threaten Bitcoin?
Okay, so quantum computing is a fundamentally different way of processing information. Traditional computers use bits, which can be either a 0 or a 1. Quantum computers use qubits, which can be both 0 and 1 simultaneously thanks to a mind-bending concept called superposition.
Okay, that's already blowing my mind a little bit.
It gets even weirder. Qubits can also be linked together in a phenomenon called entanglement, allowing them to influence each other instantaneously regardless of distance. These properties enable quantum computers to perform calculations that are impossible for even the most powerful supercomputers today.
Wow, so how does this relate to Bitcoin?
Well, Bitcoin security relies on complex mathematical problems that are extremely difficult for traditional computers to solve. But a sufficiently powerful quantum computer could theoretically solve these problems in a fraction of the time, rendering Bitcoin's encryption essentially useless.
The article quotes Arthur Herman from the Hudson Institute saying, "What you've got here is a time bomb waiting to explode." Is this a valid concern, or is it overblown?
It's a valid concern for sure, but the timeline is uncertain. Experts believe we are still a decade or more away from quantum computers being capable of cracking Bitcoin's encryption. However, technological advancements can happen rapidly, and the potential consequences are so significant that it's wise to start preparing now.
I see what you mean. If we have 10 years to solve a problem, it's best to start working on it now rather than waiting until the last minute. So, what steps can the Bitcoin community take to mitigate this threat?
Well, researchers are already developing quantum-resistant cryptography, which uses algorithms that are believed to be resistant to attacks from even the most powerful quantum computers. The challenge lies in implementing these new algorithms into Bitcoin's existing infrastructure.
That sounds like a pretty complex undertaking.
It is, and it requires coordination and collaboration from developers, miners, and other stakeholders in the Bitcoin ecosystem. The good news is that there's a growing awareness of this issue, and efforts are underway to address it.
Okay, so we've got iPhones pushing the boundaries of tech and valuation, and quantum computers potentially disrupting the very fabric of digital security. Now, let's shift gears and head over to China, where the financial landscape is a bit of a mixed bag, according to the Wall Street Journal and Bloomberg. First, the Wall Street Journal is painting a challenging picture for big oil, highlighting China's electric vehicle boom as a major threat. They say China's rapid adoption of EVs is cutting into oil demand, with gasoline and diesel consumption expected to be significantly lower in 2025. This means lower oil prices and reduced refining margins for oil companies.
Right. Refining margins refer to the difference between the cost of crude oil and the price of refined products like gasoline and diesel. When demand for these products falls, refining margins get squeezed, impacting the profitability of oil refineries.
So, it's a double whammy for big oil: lower demand and lower profit margins. Is this the beginning of the end for oil? Or is it just a temporary blip?
It's certainly a sign of the times. The transition to electric vehicles is gaining momentum globally, and China is leading the charge. This trend is unlikely to reverse. But it's important to remember that oil remains a crucial commodity for many industries beyond transportation.
That's a good point. We're still heavily reliant on oil for things like plastics, fertilizers, and countless other products.
Exactly. The shift away from oil will be gradual, but it's a trend that investors and policymakers need to pay close attention to.
Bloomberg has a different take on China's economy, focusing on the government's promise to increase public spending in 2025 to boost consumption. They're talking about expanding fiscal spending and accelerating the pace of spending. Is this a sign that China's economy is stronger than the Wall Street Journal's oil demand analysis suggests?
It's not that straightforward. China's economy is facing some headwinds, including deflation and a struggling property market. The government's increased spending is an attempt to stimulate growth and address these challenges.
Bloomberg also has an article about those property woes, reporting that despite recent stimulus efforts, economists are predicting further declines in both home prices and sales in 2025. They even quote an analyst suggesting that investors focus on developers with strong government links.
Yeah, that highlights a key aspect of investing in China, understanding the role of the government. The Chinese government has a significant influence on the economy, and those connections can have a major impact on a company's success or failure.
So, it sounds like China presents both opportunities and risks for investors.
Absolutely. It's a complex and dynamic market that requires careful analysis and a nuanced understanding of the political and economic landscape.
Now, let's move on to a story that has the potential to shake up the global auto industry. MarketWatch is reporting that Honda and Nissan are in merger talks. They've signed a memorandum of understanding to form a joint holding company, aiming to be publicly listed by August 2026. If this merger goes through, they could become the third or fourth largest automaker in the world.
Wow. This is a significant development. The auto industry is undergoing a period of rapid transformation with the shift to electric vehicles, the rise of autonomous driving, and increasing software integration. Consolidation is a natural response to these challenges, as automakers seek to pool resources and gain a competitive edge.
What are some of the potential benefits and challenges of this merger?
Well, the benefits are clear. Cost savings through shared platforms and technologies, increased bargaining power with suppliers, and a larger global footprint. However, merging too large, complex organizations is never easy. There's the risk of cultural clashes, integration challenges, and potential job losses.
That's a lot to unpack.
It is, and the success of this merger will depend on how effectively the two companies can navigate these challenges.
And on that note, let's take a quick break. We'll be back in a moment to discuss more financial headlines, including how scammers are using artificial intelligence to target consumers this holiday season.
Welcome back, everyone. Before the break, we were talking about Honda and Nissan merging, which is a huge deal. But we also need to remember the vast forces at play that are leading to this.
Right. It's not just about two companies coming together. It's a reflection of the larger trends shaping the auto industry. We're talking about the transition to electric vehicles, the rise of autonomous driving, and the increasing complexity of technology in cars.
Exactly. These trends are putting immense pressure on automakers to innovate, invest heavily in research and development, and scale up their operations to remain competitive.
So this merger, this could be a way for Honda and Nissan to pool their resources and expertise to better navigate these challenges.
Precisely. By combining their strengths, they can potentially accelerate their development of electric and autonomous vehicles, share the costs of developing new technologies, and expand their global reach more effectively.
It'll be interesting to see how this plays out and whether other automakers follow suit. But for now, let's shift gears and talk about something a little closer to home. Our wallets. The Wall Street Journal is reporting that scammers are using AI to steal money this holiday season, and Visa has seen a 200% surge in blocked fraudulent charges during Black Friday and Cyber Monday.
Yeah. Unfortunately, this isn't surprising. As AI becomes more sophisticated, so do the tools available to scammers. They're using AI to create fake IDs, shopping sites, and even deepfake videos for identity verification.
Deepfake videos, that's unsettling.
It is. Deepfakes are incredibly realistic videos that use AI to manipulate someone's appearance and voice. Scammers can use these videos to impersonate legitimate businesses or individuals, making their scams even more convincing.
So what can people do to protect themselves from these AI-powered scams?
Well, vigilance is key. Double-check website URLs to make sure they're legitimate. Be wary of unsolicited offers that seem too good to be true. And be cautious about sharing personal information online if something feels off. Trust your instincts and don't hesitate to report suspicious activity.
That's good advice. It's a reminder that we all need to be proactive about protecting our personal and financial information in this digital age. Now, let's turn our attention to another company that's been making headlines. Nordstrom. MarketWatch is reporting that the deal to take Nordstrom private is officially done. The founding family and a Mexican resale company are taking the company private in a deal valued at $6.25 billion.
Okay. This move makes sense given the challenging retail landscape. Traditional department stores like Nordstrom have been struggling to compete with the rise of e-commerce giants like Amazon.
So going private, it allows Nordstrom to operate outside the scrutiny of public markets and potentially make the necessary changes to adapt to this new environment.
Exactly. They can focus on long-term strategies without the pressure of quarterly earnings reports and shareholder expectations.
Speaking of adapting to change, let's revisit the topic of Bitcoin. MarketWatch has an article about the changing ownership of Bitcoin. Did you know that small retail investors now hold only about 9.5% of all Bitcoin?
That's a significant decline from previous years, and it's partly due to the rise of Bitcoin ETFs. These exchange-traded funds offer investors an easier and arguably safer way to gain exposure to Bitcoin without having to deal with the complexities of setting up a crypto wallet.
So instead of buying and holding Bitcoin directly, investors are increasingly opting for these ETFs, which are traded on traditional stock exchanges.
Right. ETFs provide a familiar and regulated way for investors to dip their toes into the cryptocurrency market.
This makes sense, especially for investors who might be new to crypto or hesitant to deal with the technical aspects of managing a digital wallet.
However, there's a downside to this trend. The growing popularity of Bitcoin ETFs makes it harder to track exactly how much Bitcoin is owned by retail investors versus institutions. ETF providers don't have to disclose their ownership breakdown publicly, so we're losing some transparency in the market.
It adds another layer of complexity to an already complex and volatile market. Speaking of complexity, MarketWatch also has an article about the U.S. dollar and bond yields and how they're impacting the stock market. What's the connection here?
Well, we're seeing a rise in both the U.S. dollar and Treasury yields, largely due to the Federal Reserve signaling that they will deliver fewer interest rate cuts than previously anticipated.
Okay, and how does this affect stocks?
Higher long-term bond yields make stocks less attractive to some investors. A higher yield means the present value of future profits is lower, and investors may shift some of their money from stocks to bonds.
And the stronger dollar.
A stronger dollar can make U.S. exports less competitive, potentially impacting corporate earnings and making U.S. stocks less attractive to foreign investors.
So these interconnected factors are creating uncertainty for investors trying to navigate the stock market.
Indeed. The bond market, the currency market, the stock market, they all influence each other. And right now, the signals are a bit mixed, which makes for a challenging environment.
Now, let's talk about a company that's trying to reinvent itself in a changing world. Xerox. The Wall Street Journal reports that Xerox is buying printer maker Lexmark from its Chinese owners for $1.5 billion. Why is Xerox making this move?
This deal is interesting for a couple of reasons. First, it brings Lexmark back under U.S. ownership after being sold to a group of Chinese buyers in 2016. Second, it marks a strategic move by Xerox to bolster its core printing business at a time when the industry is facing challenges from the rise of digital documents and declining demand for traditional printing.
It seems like Xerox is doubling down on printing despite the industry's challenges. Is this a wise move?
It's a risky move, but it could pay off if Xerox can leverage Lexmark's strengths and innovate to meet the evolving needs of businesses.
What are some of those evolving needs?
Businesses are increasingly looking for printing solutions that are more efficient, secure, and sustainable. Xerox and Lexmark will need to focus on developing products and services that address these demands.
Okay, so it's not just about selling more printers, it's about providing comprehensive printing solutions that meet the specific needs of modern businesses.
Exactly. The printing industry is evolving, and Xerox is betting that this acquisition will position them to lead the way.
Now, Before we wrap things up for today, I want to circle back to the topic of quantum computing and its potential impact on Bitcoin. We talked about the threats. But are there any potential solutions on the horizon?
Yes, there are. Researchers are already working on new encryption methods that are specifically designed to withstand attacks from even the most powerful quantum computers. This is known as quantum-resistant cryptography.
So it's not necessarily game over for Bitcoin.
Not necessarily. It all depends on how quickly and effectively the Bitcoin community can adapt to this emerging threat. If they can implement quantum-resistant solutions before quantum computers become powerful enough to crack existing encryption, then Bitcoin could potentially weather the storm.
It's a race against time, really.
It is the future of Bitcoin, and indeed the security of many other digital systems, hinges on the development and adoption of quantum-resistant technologies. It's a fascinating area of research with profound implications for the future of cybersecurity.
Yeah, it really is amazing to think about how something from the world of physics, quantum mechanics,
Yeah.
could have such a huge impact on things like finance and technology.
It is fascinating, isn't it? It really shows how different areas of knowledge, physics, finance, they're all connected. Advancements in one area, physics in this case, can totally change industries that seem totally unrelated.
I agree. It's a good reminder that knowledge is interconnected and that staying curious and informed is super important.
Absolutely.
Well, we've covered a lot of ground today. From Apple's ambitious AI plans to the potential disruption of quantum computing, from China's Economic Balancing Act to the merger mania in the auto industry. We even explored how AI is being used by both scammers and those trying to combat fraud. It's been a fascinating journey through the world of finance and technology on this Christmas Eve.
It has. Hopefully our listeners got some things to think about.
I think so. As we wrap up this Christmas Eve deep dive, what are some key takeaways you hope our listeners will walk away with?
I think the big theme, the theme that runs through all these stories, is the speed of change, the accelerating pace of change, whether it's AI, quantum computing, or the shifts in global economic power.
Right.
We're living in a time of unprecedented transformation.
And as investors, consumers, and citizens, we need to be ready to navigate this complex and ever-changing landscape.
Exactly. We need to stay informed, be willing to challenge our assumptions, and be proactive in adapting to new realities.
Couldn't have said it better myself. We hope you've enjoyed this special Christmas Eve edition of the Pro Ticker Podcast. We'll see you all tomorrow morning with more headlines from the major financial magazines.